Hi everyone, this is June from Turning Point Life Investment. This is your market analysis for the week ending in July 25th, 2009. Let's take a look at the market starting with a 3-year weekly view. So the biggest thing that I can say to this market is just wow, simply amazing. We had 2 straight consecutive weeks, which pretty much equals to 10 straight trading days where the market just went straight up almost continuously. You can see here we finally managed to trade above this 50-day or 50-week moving average. We managed to break above this resistance. We haven't done so since last year, about a year, a little over a year ago. So that's rather significant. The obvious target right now is 100, and I'm pretty sure everyone is looking at that same target as well. If we do manage to break above 100, the next likely target I can see for the market, if the bullishness continues, is probably going to be around this gap area. You can see somewhere around 105 and 107. There's a really decent sized gap right there. So if we manage to push it over 100, like I said, we might most likely retest this gap area right here. At least that's my target to be looking for in a little bit longer term. Zooming in into a 6-month daily view, this price action seems very similar to this price action right here in the bottom back in March. So almost a sense of urgency, almost a sense of a lot of short covering actually. I mentioned last week how we've got a pretty decent amount of short covering right here. We have a lot of people who shorted the market because, well, you know, they saw the head and shoulders, it broke the neckline. The obvious thing to do would be to short the market. I mean, like I said, I did as well. So as the market went higher and higher, a lot of these shorts got caught on the wrong side of the trade. So they're forced to cover, meaning they have to buy back their losing positions. Now, what I'm feeling is, I have a feeling there are a lot of people shorting the market right here simply because that is where the previous resistance is. Let's talk a little bit about the market dynamics. When people short the market here, they suspect or they want the market to drop. However, when it goes against them like this, they're in a losing position, which means they're losing money. Now, when you start losing money, for those of you who've traded before, your mentality changes. You no longer think about making money. You actually think about, how do I get my money back? How do I break even? And that's the type of feeling that most of these shorts are feeling right now. They want their money back. So how does it work? When the market decides to pull back, okay, when it does decide to pull back, when it falls to where the break-even level is, somewhere around the 95, 94 area, a lot of these shorts now have an opportunity to cover their positions, meaning buying back for almost break-even or even a break-even. So what does that mean? That means there's going to be some level of buying going on around this area. I would say somewhere between 93 and 95 will be a good area where a lot of shorts will be coming in, and possibly even new buyers coming in to start building support. And that's usually how support is being built, either from short covering, from new buyers, or a combination of both. Either way, if I see support being built around this area, like I said, 93 and 95, I would be a buyer. I would definitely be a buyer, continue buying the dips until it's proven wrong. Right now, the market's gone up pretty significantly, and as you know, all rockets need to come back down to earth eventually. So when it does do so, I will be a buyer as long as support holds around this level here. So that's what I'll be looking for next week. Now, going to the VIX, the VIX is in very oversold territory, drawing a trend line. You notice that we are also on the bottom support level of this declining support line. What it's telling me is that the market is very bullish. I'm pretty sure you don't need the VIX to tell you that, but it also helps to know that sentiment-wise, it's very bullish. And as a contrarian signal, when the market is really bullish, that's the time to get out of your long positions, or at least stop adding any more long positions until the market kind of relieves itself, comes out of this oversold for the VIX. If the market does correct or pulls back, I do expect some kind of bounce from the VIX coming out of oversold, And if that's the case, then it kind of relieves the overly bullish overtone in the market currently.